This meeting is being recorded.
So you can cut.
Yes. Okay. So good morning, friends. Okay, I think 14. Okay, no problem.
Morning, sir.
Yes, good morning. Yes, good morning. Good morning. Okay, friends. So today we'll utilize, okay, maybe 2 hours just to revise all points. Okay, there are so many points you have to remember, but how far this will help you? Quick revision on frequently asked questions. Okay, so first I will start only theory. Then, if time permits, I will share some arithmetical problem also in exchange rates and cross currency, forward rates. Okay, so that always will be there. 10 marks questions will be there on rates. Other questions frequently asked. Okay, we'll have a quick revision. Question, answer, question, answer. Okay, friends, I think we'll keep on assimilating. You don't have to note down anything because I am going to share all this with you immediately. So just keep focused on questions, answers. Okay. Yes, friends. Okay. Now I will upload. Host disabled your. Oh, Ramaji. Rama, you have to allow screen sharing.
Yes, sir.
It is not allowing screen sharing.
Okay, okay.
Host
Okay.
disabled. Okay. Now it is.
Now it is, sir. Okay.
Now it is. Okay, friends, revise session on international banking, FAQs, frequently asked questions. Okay, so question number 1, when rupee weakens, what will happen? These are the questions normally being asked. Now rupee is weakening. So what will happen? A and B will happen. The exports will become cheaper because the exporter will get more rupees and imports will become costlier. Okay, imports will become costlier. So why it is costlier? Because the importer has to pay little more to retire the import bill. So rupee weakening mean the export will become competitive or cheaper, but imports will become costlier. So the correct answer is F. Okay, friends. Okay. So one by one, question, answer, question, answer. Okay. So in letter of credit mechanism, sorry, 2 questions will be shared. You look at the question. Bill tendered by an exporter. The exporter is the beneficiary of a LC. He submits the bill, but the bills are with some discrepancies. Discrepancies means the bills are not as per LC time. Some issue. Okay, maybe delayed presentation, overdrawn, anything can be a deviation. That is, they call discrepancy. So that I will load my that pointer. So the pointer laser. Okay. So the buyer prepared to waive the discrepancy. So he talked to the buyer. For example, instead of 15th July shipment, latest date for shipment is 15/7, but the exporter has done it on 16/7. So it becomes a discrepancy, deviation. So you talk to his buyer. Buyer told, no problem. So they will give a case study like this. The buyer told, I will accept 1 day only, no, because their relationship is good. They are accepting. But the issuing bank is adamant. You see the question. But the LC issuing bank took a stand to reject the payment on account of discrepancy. So the correct answer is Issuing bank is the absolute authority. The answer will come here. Okay, answer will come here. Issuing bank is the final authority to decide whether to pay or reject. So the buyer cannot decide, applicant cannot decide, issuing bank for any reason. Maybe the party is about to become NPA. So even if the applicant, importer agrees to waive the discrepancy, importer's bank may reject. Understood? Okay, friends. So are you all with me? Yes or no? Okay.
Yes, sir.
Question
Yes,
answer.
sir.
Yes, sir.
Okay. Question answer. Now question number 3. This question frequently, the 2 and 3, why I have selected only questions that are likely to be asked for your exam or very frequently being asked for international banking, CAIIB. The third question, I think all of you know, the one exporter got a LC. He presented all the document and complied with all the terms and conditions as per LC. But till the buyer wants to reject because he is approaching his bank and he is telling to reject. Sir, LC okay, but we have already got a contract. So some terms and conditions as per the contract not fulfilled. Now whether he can reject on the grounds of contract or if the LC terms are fully complied with, he has to necessarily pay.
Answer is
The
B,
answer
sir.
is
B.
B. Answer is once the LC is established, LC will be supreme. LC will be supreme, not contract. All contract will have to be reflected in the LC. If it is forgotten to be reflected in the LC, whatever told in the LC is final. Whatever told in the LC is final. And amendment also, if he is agreeing only, it will be effective. If one person does not agree, it will not be effective. So original LC only will be valid. So like that, they will, okay, very good. Okay, question number 3. Question number 4. FOB price of a cargo, international cargo, how much it should be insured? This is the question. Question number 4. What should be the minimum value of a international cargo? You remember the answer is 110% of CIF value. If you want to note down, briefly note down. 110% of CIF value. So here they have given FOB value plus 2% you have to add. Okay, that is insurance. Again 10% you have to add. That will become freight. Okay, so this will become only insurance and freight is added. Again 10% you have to add. You see how you have to. So the answer will be 12,320. I'll have to take your calculator. So the rule is, okay, 10,000 plus 200 plus 1,000. Okay, again 10% on that value you have to add. Not on this value. After loading this CF value how you will get? Again you note down FOB value plus insurance plus freight equal to CIF value. CIF means cost, insurance, freight. In FOB, freight and insurance not included. FOB free on board, freight and insurance not included by the seller. Okay, so but insurance should be 110% of the CF. This we have discussed. Definitely there will be one question, remember. Now question number 5. An Indian exporter
You explain it
shipped
on the
goods. Which one, Ji?
fourth, sir. Fourth, sir.
Huh?
Fourth, sir. Fourth one. Fourth one.
Oh, here, acha. Okay.
Fourth.
Fourth one.
Yeah.
Yes.
How we have?
Oh, this one, fourth one.
Yes, sir.
You want the answer? Answer is C. That is 12,320. Not USD. This is how you have to. So your answer, you want the explanation for this answer?
Correct, sir.
Okay. C. Here question number 5. Okay. So all bullet points that are sure to be asked in the exam. An Indian exporter shipped goods to, here this question also frequently being asked. He's an Indian exporter. So the currency in India is rupee. He shipping worth $10,000 to Japanese buyer. Insurance can be in rupiah. Insurance can be in Japanese yen. insurance can be in rupee or Japanese yen as per mutual acceptance, or insurance would be in US dollar invoice currency only. Now what is the answer? Answer has come already. D is the answer. This you never forget. Insurance has to be in the currency of the invoice. Not applicable to country, any currency, invoice, which currency, same currency, it has to be insured. Agreed? And 110%. Okay, friends, these are the bullet points. Question number 6. Question number 6, one case study I have given. Okay, because 5 marks will be always there on UCP case study. By chance, same case study comes, you can easily remember. Okay, now one by one, I think we have discussed, but anyhow, you remember. Third party shipment made, you can note down. Third party shipment, if you want to note down, because these are the points. Sometimes when I ask you to note down, you can note down. Okay, otherwise the answer is there. If you are confident, you can read from the yes, you can remember from the yes presentation. Always it is welcome. So the third party shipment permitted, note down, permitted, underline, if third party shipment is not specifically prohibited. You understood? If the LC doesn't prohibit third party shipment, it is not prohibiting, that means it is permitted, openly permitted. What is third party shipment? The shipper, all other document will be by the beneficiary. Only ship in the port, somebody's name appear as the shipper. That is shipper. Shipper means the person who ships the goods in the port. So if it is third party other than the exporter, only for shipping, that bill of lading and all, if the name differs, is not a deviation, is not a violation, because third party shipment is not prohibited. Normally, they will not prohibit because they will allow, because they want goods. He will be the agent or it will be the sub-office. So they will, their name will appear. So unless it is prohibited, third party shipment is permitted. That is one. Okay. Second also, LC dated 10/9, it is dated 10th September, but the bill of lading presented was 5/9. LC itself is 10/9, but the documents under the LC was 5/9. Now you can take a exception. Sir, how it can be? So it is a discrepancy. No, it's not a discrepancy. Again, this is also not a discrepancy, because if it is not prohibited, specifically prohibited, third party shipment is made. LC can be, yes, documents can be dated earlier to the LC if such documents are not specifically prohibited. If the buyer and seller wants to prohibit, the buyer wants to prohibit, he should specifically tell documents earlier to the date of LC not at all allowed. He should have told like that. If he has not told like that, it is amounting to permitted. So 5 mark question, don't leave. Okay. Next one, invoice is for 108 ton. Now the LC for 100 ton, but they are using the word approximately. 100 ton sugar approximately. Then the third is also not a discrepancy, because when they are using the word approximately in the LC, plus or minus 10% permitted. That is called tolerance level. So the exam, they will use the word tolerance, plus or minus 10% permitted. Yes. So 108 is perfectly okay. The fourth one, okay, so they will give all examples, live cases. 2 bill of lading produced. Okay, here part shipment is prohibited. The LC tells part shipment not allowed, but the exporter has shipped in Vizag port 60 ton and in another port Chennai 48 ton. The 108 ton is not shipped in one port, 2 ports, but in the same ship. Now whether it is treated as part shipment? No, the answer is no, because provided it is loaded in the same ship, same voyage. Because when it goes to the end, the destination, it will go as 108 ton only. Though it is loaded here, but it should be in the same ship. Okay, so that doesn't become a part shipment. So the question they will ask, whether third party permitted? Yes, permitted if it is not specifically prohibited. So they will give option, pick up the option, 1 mark. The second one, whether document prior to LC acceptable, they will ask and they will give 4 option and you have to pick up the correct option. Yes, permitted. If documents prior to date of LC specifically prohibited mean permitted. Because they are not prohibited, so it is permitted. Documents prior to LC also permitted because they are not prohibited. So it is not a violation. It's not a discrepancy. Whether invoice for higher quantum allowed? Yes, because they are using the word approximately plus or minus 10% allowed. So this is how you have to answer. Then whether rejection is possible for part shipment? No. Though part shipment is prohibited, because these are loaded in the same ship, same voyage, it doesn't become a part shipment. So it is allowed under UCP rules. Okay. So provided it should be shipped in the same ship. Whether document can be rejected on the reason terms of contract not complied with? No. Terms of contract not complied with cannot be reason because LC terms are supreme. LC terms are supreme. Contract terms will be ignored. Okay. Though the LC is based on contract, once the LC is established, only LC is supreme. Okay. So 10 questions over. So is that speed okay for all of you? Yes. How do you feel? Is it okay? Because a quick revision, I am sharing all these questions with you. Have a quick look, you are through. Okay, by chance. All are what we discuss. Yes, boss. I want feedback from one of you, at least 2 of you.
Yes, sir.
Yes, boss.
Yes, sir.
Yes. Are you able to follow? Very good. Now, question number 11. Question number 11. This question also very frequent.
Hello.
Yes.
Sir, part shipment specifically prohibited in this question.
Yes. LC tells prohibited. Though it is prohibited, UCP tells when it is shipped in the same voyage, subject to one condition. If it is on different ships, then it is a part shipment only. But here what happened? It has been loaded in the same ship, Vaisak, some load is made. Then the same ship comes to same voyage, comes to Chennai port. Again in Chennai port, the balance is loaded. So it becomes a full shipment at Chennai port. So it doesn't amount to part shipment. You understood? Though it is
Sir, but in
prohibited.
this question they have not mentioned in
Huh? I think one time. Tell madam.
in this question they have not mentioned loading in the same ship, no, sir.
That other madam, Vaisak port, and that mean that is why sometimes the questions you have to imply. What they are told, it is loaded 48 some tons are loaded in Vaisak port, and the same ship it will be like that only. And again it cannot be in the 2 bill of lading given. You remember the question? 2 bill of lading, one at Vaisak, another at Chennai, but in the same ship. So that you have to imply something sometimes may not be told specifically, madam. So you have to immediately infer same ship because when it reaches Australia, it will go as a okay. That is why because sometimes they will not tell everything openly, madam. So you have to read immediately, quickly understand. Okay. Now you see the LC case study. The transferable LC always they will one question they will ask. Now you see. If it is a transferable free LC, again there are 2 type of LC. Free LC, restricted LC. I think you know the meaning of free LC mean. This can be negotiated by any bank mean free LC. If you want to note down, right now you note down. Free LC mean the LC can be negotiated, that is mean financed by, negotiated mean financed by any bank in India. That is free LC. So it's a at the same time it is transferable. Then who will transfer? Advising bank only will transfer. Free LC will be transferred by advising bank. Second case, in case of a restricted LC, who will transfer? Okay. It's a restricted LC, who will transfer? Restricted LC mean the LC is available only in a particular bank. LC is going to be available only in a particular bank. then again it is transferable. Mean who will transfer? That bank to whom it is restricted, they will transfer. So this question also frequently being asked. Free LC, advising bank will transfer. Restricted LC, the bank to whom LC is restricted will transfer. Transfer means they will transfer the benefits to another beneficiary. The one beneficiary has to give a letter. Without letter, he cannot transfer. So the original beneficiary will tell, sir, I have some issues in my factory. So it's a transferable LC. Please transfer this LC part or full. It can be transferred part amount also, full amount also. But who will transfer? Advising bank in the case of free LC, restricted bank in the case of restricted LC. Understood, friends? Okay. Now, the answer will come here. Answers, yes. So question number 1, understood. Question number 2, restricted LC, to whom it is restricted. Question number 13, okay, 13 is a confirmed LC. Who will confirm? The same confirmation will be done by, supposing it's going to be a confirmed LC. Okay, then who will confirm? Not the bank to whom it is restricted. So then it will become a restricted LC. Okay, if it's a confirmed LC, mean it will be restricted to the bank which is confirming. Always who will confirm? Always the advising bank. Remember, all LCs, the confirmation will be added by the LC advising bank. Once the confirmation is added, then no other bank can negotiate. Then it becomes a restricted LC. Because they added confirmation, no, they will only negotiate. So the confirming bank will only negotiate. So a confirmed LC is also a restricted LC. Because they have added confirmation. These words you have to remember. Restricted LC is different, confirmed LC is different, but once a confirmation is done, the same bank only can negotiate. Because, okay, confirmation, negotiation will be at the counters of the same bank. That is which bank? Advising bank. Because within them, there will be some arrangements. So these things we have discussed because these are the frequently asked question. I am again, yes, just to refresh your memory. Okay, 14. Then 15th is if LC is confirmed, answer. If LC is confirmed, who will do negotiation? That confirming bank only will do negotiation. Who will be the confirming bank? Advising bank. So in that case, advising bank will become advising bank, confirming bank, and negotiating bank. All the three roles will be played by whom? Restricted LC, advising bank in case of a confirmed LC. The advising bank will become a confirming bank. First they will advise. Then they will look at the one paragraph will be there. Please advise that there will be one field number 49. They will have told confirm. So they will download the message that is advising. Then they will add their words at the request of our correspondent bank so and so. We also hereby like that they will type out a text and it will be signed by 2 authorized signatories of the advising bank. Then it becomes a confirmed LC. Then supposing the exporter wants finance, he can only go to that bank only. So negotiation also will be done by the confirming bank. Understood? So that question always they are asking. They will give by way of examples. Okay. So and so bank, Indian bank, IOB has advised. Now afterwards it becomes a confirmed LC. Which bank will confirm? IOB only can confirm. Then the exporter has to tender the document to whom? The exporter has to tender the document only to IOB because it has been confirmed by IOB. Yes.
Sir, can you tell this with an example, sir?
Example. Okay. Now, originally, one LC comes that is advised by, that is Citibank New York. Citibank New York has sent a LC to their correspondent bank. Okay, we'll be knowing SBI Chennai. State Bank of India Chennai has received a LC in their computers from their correspondent bank. So now Chennai become the advising bank. Chennai SBI become the advising bank. Agreed, boss? Now that is point number 1 clear. Now who has become the advising bank? The correspondent bank of the LC issuing bank. The LC issuing bank, Bank of Citibank New York. So they have sent the LC text message to SBI main branch, SBI Chennai. So SBI Chennai will become the assuming the advising bank. Now, if you read the LC, there are one field number 49. You can note down field number 49.
Sir, not audible, sir.
Which one?
Sir,
No, I am not able to hear. Tell me, boss. Repeat. Hello. I think your voice is breaking. Others are hearing. Somebody
sir,
wanted
can
to...
you, sir, can you
now
repeat once again? Some interruption was there in your voice.
Okay. Now are you hearing me correctly? Okay. I think some maybe
Yes, sir, yes,
others
sir.
are hearing. Okay, maybe with your terminal or your mic. Okay. Now first one I told Citibank New York is the LC issuing bank. The LC is coming from America in favor of a Chennai exporter. So the LC is landing in the machine, shipped machine of, okay, for example, State Bank of India, Chennai. Now State Bank of India, Chennai becomes the advising bank, the correspondent bank of Citibank, New York. Okay, friends, first point understood. Now, understood? Correct? Okay.
Yes, sir.
Okay. Now, if you read the LC, there are several fields. I think some of you have read. You can note down. Field number 49. It's a formatted message. In field number 49, there is one column known as confirm. So there what they will use, without if they use the confirm, this side it will be confirm. That will be printed. That will come as a template. This side they have to key in. If they have keyed in, yes, confirm. If they have keyed in again, confirm, then it becomes a confirmed LC. Sometimes they will add the word without. Without mean it is not to be confirmed, because confirming LC is a costly exercise. If they use the word confirm, confirmation instruction, that side it will come. If they have only 7 character letter, it will 7 alpha character only, it will accept. Confirm. How many characters are there? CONFIRM. So if it is confirm, the word appears, it becomes a confirmed LC. Sometimes they will use the word without. That also 7 letter. Without mean it need not be confirmed. Sometimes what they will do, may add, they will ask. May add, may, MAY, one space they will put add, ADD. So here the option is given to the advising bank. If they want to add confirmation, they may add. Otherwise, they may not add confirmation. You understood now? Now it becomes a confirm, the word appear, then it becomes a confirmed LC. Now who will confirm? The advising bank only will confirm. Now State Bank of India, what they will do, they will download the message. If they are unconfirmed, they will simply send the message. Send the message to the beneficiary. If it is a confirmed LC, because the word confirm appear, State Bank of India will download the message and they will type out another, in their letterhead, they will type out another text. What the text, you know? At the request of my correspondent bank, Bank of Citibank, New York, we hereby add confirmation to this LC. That means we also take the responsibility of like a guarantor. We also will negotiate the bill if it is produced as per the terms and conditions of this LC. That is, we also will negotiate finance. We are also as good as issuing bank. So that commitment they will type and it will be signed by 2 authorized signatory. Then it becomes a confirmed LC. Now the confirmed LC will be handed over to the beneficiary exporter.
Sir,
now the exporter can, yes, friends.
Sir, here now both advising bank and confirming bank are State Bank of India, Chennai, sir.
Same. Note down, if confirmation has to be added, no other bank will add confirmation. Only advising bank only will become the confirming bank. This point, that point also you note down. Who will become the confirming bank? The advising bank only will become the confirming bank, because adding confirmation need credit limits. Adding confirmation needs credit limits between the reciprocal limits between the LC bank in America and the other bank, Chennai. SBI is in Chennai. So those banks will have an arrangement. Okay, you add confirmation to our LC, and your LC I will add confirmation. So they will have entered into an agreement. Unless there is an arrangement between them, no LCs will be confirmed. Confirmed LC means tomorrow they are going to pay, State Bank of India is going to make the full dollar payment. So they, unless there is an arrangement, they will not do confirmation. Agreed, boss? Now confirmation, you understood? That is the confirmation. So once the confirmation is done by State Bank of India, now they will twist the question. The party is with Canara Bank. Now where he has to, the party is banking with Canara Bank. Now to whom he will give the document, they will ask. No. Now he has to give the document only to State Bank of India, because once the confirmation is done, the LC is restricted to the confirming bank. The restricted to confirm. Now, confirming bank only will do financing. Negotiation means they will give the full money. You understood? So all the three will be done by the advising bank. Advising bank, confirming bank, then also they will become the negotiating bank. Negotiating bank means they will collect the interest, they will collect their charges. All these things will be done by the one bank. So this situation they will give. Understood or not, boss? Understood or not? Yes or no? Frequently being asked question. Yes, tell me, boss. Yes, sir. Hello?
Yes, sir.
No answer. Understood? Okay. Now 16. What is meant by payment under reserve? This question also they will ask. In LC, minimum 5 questions will be there. Payment under reserve. That means, note down, you see the question. If the documents reveal some discrepancy means some documents are not as per LC, the negotiating bank, because the negotiating bank will, the exporter may be the customer of that negotiating bank, they may negotiate by taking an indemnity, because they are customer, because he cannot refuse, he cannot reject the payment. Okay, I will reject. And if at all the final bill is rejected by the LC bank, you have to pay back the money. You have to pay back the money. That concept is known as what? Indemnity. I think we are not taking indemnity? In case of loss to be suffered by the bank, you have to reimburse the money. That means indemnity. So as this is called as what? This exercise is called as payment under reserve. What does it mean? If the final bill is not paid because of some discrepancy, I have given you finance. The finance I will recover back. That is known as payment under reserve. Agreed, Abbas? So this question, 4 options they will give. Correct option you pick up. Okay, agreed? Okay. Now next question is, what is meant by clean negotiation? Clean negotiation in the sense the documents are exactly as per LC. Note down. Clean mean sometimes they will use to confuse you. Clean negotiation means some documents are not tendered. No. Clean negotiation mean all the documents submitted under LC are strictly as per LC term. So there is no discrepancy at all. So the bank has done clean negotiation, mean all documents are perfectly okay. That's the meaning of clean negotiation. Under reserve. Clean bill of lading. Clean bill of lading mean a bill of lading with some defective clauses. Packed properly, quality is not okay, it's already leaking. So such remarks in the bill of lading becomes closed bill of lading. Closed. The clean bill of lading mean with no remarks. Closed bill of lading mean opposite. Clean bill of lading mean there is no remark, adverse remark, kuch nahi. No remarks. It's a perfectly packing, everything is perfectly fine. That is why it's a clean bill of lading. Closed bill of lading. Sometimes they will ask CLAUSTED. Closed bill of lading mean the bill of lading, the packets or the parcels are with some leakages, not correctly packed. So they made a remark. That remark amounts to closed BL. Closed BL will never be accepted. Only clean bill of lading will be accepted in international trade. So up to 18 questions understood. Okay, speed is okay. Correct, our friends?
Yes, sir.
Okay, this will help you. Surely I'm telling you, this will help you. So that is why clean bill of lading, opposite is closed bill of lading. Okay, now 18th over. Now 19, I am giving a case study. Case study or a situation. Okay. Okay. First situation. Oh, sorry. Here, some 5 questions they may ask. For example, he is a supplier. Okay, some case study. I have not constructed the case study because with one slide, I am just trying to explain. Please remain focused. There is one importer, for Indian importer, friends. Okay, he is in India. He is wanting to import some goods from America, but he does not have ready money. Suppose he want to buy a car, he should have a ready car, he should have, or he should tie up with a loan. So he is wanting to import something, but he's not having money. So what he is telling, he is talking to the exporter in US. He is telling, please give me 6 months credit. Please give me 6 months credit. Okay, he is requesting him. I will definitely supply. So you give me 6 months credit. So the other person, because he appears to be a good person, because they will know each other. So he is telling, the exporter is telling, okay, I will give you 6 months time. That means I will send the goods today. You pay after 6 months. So that is known as what? So this arrangement between exporter and the Indian importer is called as supplier credit. What is supplier credit? They will ask. So instead of making it through a prose format, I wanted to explain through a simple slide. So supplier credit, note down. Supplier credit mean the goods are sold by the seller abroad to the buyer in another country on credit terms. Credit terms means what? Goods will be received today, payment will be made afterwards. And how many months credit he has asked? 6 months supplier credit. So this is situation 1. Understood what is supplier credit? Now, this exporter, though he has given 6 months credit, and the value of the goods is $1 lakh. $1 lakh means today's exchange rate 78 lakh. It can be on site also, USANs also. He has given 6 months. When it is on site, there is no supplier credit because immediately he is going to pay. Now he is going to pay after 6 months, So that is why this transaction is called as supplier credit. Okay. Now the exporter tells, sir, I am giving you 6 months, but to be on my safer side, because this man will be naturally perturbed. Because if he, after 6 months, if he doesn't pay, he will be in trouble. He will suffer a huge loss. So the exporter abroad in America, he tells the Indian importer, I have given you 6 months time, but why don't you go to your bank, okay, maybe State Bank, and give me a letter of credit. So the importer will go to his bank and his bank will study his profile of whom? Indian exporter. And if they are satisfied with the standing credit report of the Indian importer, so the State Bank of India will fix a credit limit for LC, non-funded credit, and they will open a LC in favor of Citibank New York. Who is Citibank in New York? The exporter's bank. Now the Citibank New York will be happy because payment is assured not by the Indian importer, payment is assured by importer's bank, State Bank of India. So this is known as letter of credit. Letter of credit is a transaction between the importer's bank and the beneficiary exporter, but advised through his correspondent bank. So the importer's bank, State Bank of India, they will send the message to Citibank New York. They will download the message and they will transmit the message to the exporter. So the exporter is happy, Citibank is happy, our importer's bank SBI is happy, and importer is also happy. So this is one arrangement. Now after 6 months, if he doesn't have money, this Indian importer after 6 months he took time, supplier credit. After 6 months, if he doesn't have money, then he will go to his bank. Which bank? The importer's bank, and he will approach for, sir, I do not have money. So why don't you organize another 6 months time buyer credit? Now buyer credit. This is seller credit. This credit is given by the seller. Now the seller after 6 months, he will go on sending a reminder. He will hit the Indian importer. I gave 6 months. What happened to my payment? What happened to my payment? But this importer is still not having money. So he will go to his bank. Sir, 6 months over, sir, I am not having still money. Sir, please give me another 6 months time. And you arrange another 6 months credit because I have to settle to the exporter abroad. So now RBI guideline note down the RBI guideline. The trade credit for raw material is maximum up to the buyer credit or supplier credit, both can be up to 1 year credit. So for non-capital goods mean If it's importing services, importing raw material, 1 year credit is permitted. If it's importing machinery, 3-year credit is permitted. Note down. I think these are the questions they will ask. The supplier credit or buyer credit can be maximum up to 1 year for raw materials or services. It can be up to 3 years for capital goods. What is capital goods? Within bracket you put machinery or technology or equipments. If it is importing technology or importing machinery or equipment, it is called capital goods. Capital goods, 3-year credit you can take. What do you mean by 3-year credit? 2022 you can get the goods. 2025 only you need to make payment, or in installment you need to make payment. And this payment has to be guaranteed by the banker. So the banker can open 3-year LC also for machinery or for capital goods. Okay. So these are the questions they will ask. Now, this man wants another 6 months credit, but these people are not giving extension. They want money. So the importers bank, that is State Bank of India, they will send a message to their correspondent bank abroad, another bank, maybe for example, HSBC. State Bank of India, they have got their own branch. For example, I am telling, okay, it is Citibank, it is Karur Asia Bank. Karur Asia Bank doesn't have a branch. So Karur Asia Bank talk to HSBC. So the HSBC will give another 6 months credit. So this credit is known as buyer credit. This credit, this is seller credit, supplier credit. This credit is known as what? Buyer credit. What is buyer credit? Buyer credit is always organized by the buyer's bank. The buyer bank will request another bank to give another short-term credit to settle to the exporter. So this is called as what? Buyer credit. This is supplier credit. Is the buyer credit. This is 6 months. Assume this is also 6 months. 6 plus 6 should not exceed 12 months. 6 plus 6 maximum 12 months only permitted for non-capital goods. Capital goods 3 years. Suppose he is giving 1 year, another 2 years you can arrange for a buyer credit. Totally should not exceed 3 years. These are RBI rules. Understood, boss? So with the case study, they will ask what is supplier credit. This transaction is what? This transaction is what? So the transaction between Indian importer and bank is known as letter of credit. So this LC will be advised. So the Indian bank which is acting for the importer is called what? LC issuing bank. And this bank is called advising bank of the LC issuing bank because they will be correspondent. And the exporter is called beneficiary. And this is the supplier credit. Okay. And this bank is again arranging with another bank abroad, another 6 months time as per RBI guideline. That credit is known as what? Buyer credit. So these are the words you have to familiarize. One slide I will share with you. Okay. So any question? Have you understood? Yes, please. Yes or no?
Sir, for capital goods, 3 years credit period.
Which one, madam?
For capital goods, 3 years credit period.
3 years. Totally.
For non-capital goods?
Non-capital good 1 year, madam. 1 year. 1 year the maximum as per FAMA guideline. And the size of the credit 50 million. How much AD power they will ask? Again, the one more thing you note down. The powers of the bank. RBI powers more than 50 million per occasion. 50 million per occasion. And the rate of interest also they will ask. Note down. LIBOR plus 2.5. Right now you 5 questions they will ask. What are the powers of the AD they will ask? AD mean bankers. Note down. US dollar 50 million. US dollar 50 million. 50 million mean almost 380, 370 crores. And what is the maximum rate of interest allowed for buyer credit or supplier credit? That they will ask. You note down. LIBOR. LIBOR mean London Interbank Offer Rate plus 2.5% or 250 points. In the exam, they will use the word 2.5% or they will use the word 250 points. That's the maximum. But within that maximum, people can bargain and they can have a concession rate. That is left to the RBI is telling only don't exceed the maximum. So 5 questions may come on. This is called as what? Trade credit. Collectively known as trade credit. This is supplier credit. This is buyer credit. Okay, buyer credit. But both are together known as what? Okay, 1 second, friends. Together known as trade credit. Okay, friends. Okay. Just one. Somebody knocked. Okay, friends. So the next question, merchant in trade. One small concept. I think I wanted to explain merchant in trade. So earlier questions, your doubts are over. 5 questions they may ask. Yes, friends.
50 million trade credit is for capital and non-capital goods also.
Both. Capital goods and non-capital goods. Size of the powers of the EID is 50 million, and the rate of interest is even for supplier credit, 1 year credit or 3 year credit. Maximum rate of interest is LIBOR plus 2.5, and maximum powers of the EID is US$ 50 million. Supplier credit, buyer credit. What is the rate of interest? All those things. 5 mark question also they may ask in the form of a case study. What is this type of credit? What is the buyer credit? They will not tell buyer credit. They will give the bank in India arranges with the bank abroad to settle the exporter's bill. This arrangement is known as supplier credit, buyer credit, external commercial borrowing, something they will try to twist you. So carefully identify this slide, you keep in mind. So 5 questions. If you understand the concept, 5 mark you can get easily. You can get. Okay, friends. So the next 5 mark question, sometime case study they will give. Merchant in trade transaction. Merchant, because this nowadays, merchant in trade. What is merchant in trade? For example, first I will try to explain through one small, small chart. He is the exporter, friends. Company A in India, who is doing merchant in trade. The definition, merchant in trade mean definition you will understand when you just 2 minutes I will explain the slide, then you will understand what is merchant in trade. So there is an exporter in India, because very sometimes IC sale also they are asking, because CAIIB, CAIIB all advanced questions will be asked. What is merchant in trade? Here he has got an order. Our Dubai, our exporter is in he may be in Bangalore or Chennai. Company A in India. He may be in Chennai or Bangalore, but he is a man merchant in trade. What is merchant in trade? Another 2 minutes, just 2 seconds you wait. He has got an order from Dubai, or big order from Dubai. Company in Dubai has given a order to the exporter in India. Now, exporter in India, he is a merchant in trade man. What is merchant in trade mean? He doesn't do any goods. He is only a big exporter, but he has an arrangement. What arrangement? He is sourcing the goods from a company outside India. He is sourcing the goods. Okay, he is the exporter. He is going to be the exporter. He will raise the invoice. He has got the order, but the goods are not in his custody. Here he may be having a liaison, or it may be a branch office, or it may be a friend, or it may be another company. He has a secret arrangement. The arrangement is at Singapore. One company is there, company at Singapore. That means now Indian exporter who has got an order is sourcing the goods from abroad. What he will source? He will not bring the goods to India. He will directly tell the Singapore man, ship the good directly to Dubai. Because when I have to explain a concept, this concept is explained maybe in a regular classroom is explained, but now to quickly understand, I thought a chart will help you. Now the Singapore man under his instruction will send the goods directly to Dubai port. The company in Dubai will get the goods directly from Singapore, and the Dubai man will not remit the money to Singapore. He will, all bill will go from India. All bill will go from India. The only shipping will take place from Singapore, third country shipment, and it will go to Dubai. Dubai man receipt of good, he will settle the invoice, and all will go from India, including bill of lading. Every document will go from India only, and he will send all the document to India only, and India will send all the document to Dubai, and Dubai man will settle to India man. After that, India exporter, that he will receive the full payment. He will settle as per agreement lesser value to company in Singapore. This is called as merchant in trade. So the definition of merchant in trade is goods are shipped from one third country or sourced from. They will use the word either shipped from or sourced from one country and directly shipped to the beneficiaries country or third country. It may go to Dubai also, it may go to Australia also. But payment order only will come from Dubai. And the Dubai man sometime will send the goods to France. They will have. So now this is all freely permitted under FEMA. You understood? FEMA is a mechanism, Foreign Exchange Management Act, which broadens the international banking and international trade. So that is why this type of questions will come. So here, what will be the questions that will come? What is the maximum cycle of this? Maximum cycle of this transaction. Okay, and this is IC sale. What is the maximum size of the maximum cycle of the transaction? Now he has got an order. Now he will give instruction to Singapore. The Singapore man will ship the good, send the good directly to Dubai. The Dubai man will send the money to India. Then Indian man will again send the money to settle the money to Singapore secretly. And this is known as what? Merchant trade. Now the question they will ask is, what can be the maximum cycle of this transaction? They receive the order, ordering here, then shipping from here, then getting the payment, then settling the payment to, this is export leg, this is import leg. But goods will not come into India. Goods will not go from India. Goods will go directly from Singapore, example, from third country to another country. This is the definition of merchanting trade. This is permitted? Yes, permitted. But subject to RBI guideline. What is the RBI guideline? RBI guideline number 1, the whole cycle should be completed within. That I have not given the point, you better note down. The merchanting trade cycle should be completed in 9 months. Remember, 9 months. The second point is, 5 questions they will ask. The forex outlay means what? If the Dubai man settles only, from the Dubai man, Indian exporter should receive the dollar, then only he can settle the dollar to Singapore man. If supposing to Singapore man he settle first, afterwards he realizes from Dubai man dollar next, then it will become a forex outflow minus forex. That is forex, that is after receiving the forex, if you are remitting, that is a positive scenario. Now, even before receipt of money, dollar from Dubai, our Indian exporter is settling to his Singapore man. That is known as what? Negative situation. The negative situation should not exceed 4 months. The negative situation should not exceed the 9 months, 4 months, you keep in mind. Again, the difference between this value and this value should be minimum 5%. Because he is an exporter, this is an export earning for India. And this is the import. He is getting the goods from Singapore, no? So for the Singapore man also, he should give the money. Entire thing he cannot take because the goods are sourced from Singapore. So this is known as merchant trade. So the difference in the value should be minimum 5%. Note down. The minimum in the value should be 5%. Okay, this is called merchant trade. It may be a 2 mark question or 1 mark question. Don't miss the question. Any doubts? Tell me. The questions possible is, what is the maximum tenure of the cycle, tenure of the merchant trade transaction? What is the merchant trade transaction? Also, definition they will ask. Definition, remember, goods are sourced from one country, one third country, and dispatched direct to another third country without the goods coming into India or the goods leaving from India. There will be no bill of entry, there will be no shipping bill, okay, for this transaction, because directly from Singapore to Dubai is going. This is merchant trade. Understood, boss? Okay, if at all asked, don't miss the question.
Sir, RBI guidelines once more explain.
RBI guideline
Negative
number 1.
situation and
Negative situation should not exceed 4 months, madam. Negative situation means what? Supposing here he is settling, the Dubai man is taking 6 months time to settle to Indian exporter. But here, immediately he is giving the money. Okay. Today he has shipped from Singapore to Dubai and the Dubai man will settle after 6 months. But our Indian man, because he is having money, immediately settled to Singapore. So the negative situation is now 6 months. Here it is 6 months. Here it is site. So 6 minus 0, 6 months. This is a negative situation has exceeded 6 months. Now, RBI is telling, even if the negative situation, positive situation only is okay, RBI guideline. Even if negative situation, they call it forex outlay. Forex outflow or forex outlay, the period of forex outflow should not exceed 4 months. What is 4 months? If it is 6 months here, he can settle to him in 3 months. So 6 minus 3, 3 only within 4 months. Or 2 months he can. It should not exceed 4 months. That is second point. First point, entire cycle 9 months. Second point, the forex outflow, forex outlay should not exceed 4 months. The third one, the forex accretion, the NFE, they will call net foreign exchange, because this is a income for India, forex inflow for India. This is the forex outflow for India. Agreed? So the difference should be minimum 5%, 5% of the whole transaction. Suppose a 1 million transaction, 1 million mean 5. So this should be 95% only. They should settle to Singapore man. Otherwise, nobody will do international business for 5% profit. Otherwise, profit margin should be minimum 5%. 5% nobody will do for 5%. Minimum 20, 25, 15 it will be there. But the RBI rule tells minimum profit, that is foreign exchange earned for the country should be 5%. Okay, madam. So these 3 questions plus definition of merchant in trade, that is 4th question. Any other question also they will twist you. So 5 questions are likely. Agreed? Understood? Yes. Okay. Now, one more point, high C sale. I think some, if at all one question is there, don't, yes. Okay. This is a concept. Questions I feel should not be there. High C sale. What is high C sale? Here, Dubai, you forget. The goods are coming from Singapore to Chennai, man. Here you, another slide I have not prepared. The same slide I will try to explain. What is high C sale? That is different from merchant in trade. These are the new developments in international banking. Okay. What is the company in India? They are sending the goods to India. Now, it's not directly going to Dubai. High C sale means high C sale. Now, he is getting the goods from Singapore. The goods are coming to India and the goods are likely to reach India in another 30 days. So in 30 days, for example, 1st May, it has been shipped in Singapore, and in 30th May, it may reach in India. But on 20th May, these people, this man, he will sell to someone in inland. That is, okay, he is a man in Chennai. He will sell something to Bangalore man. Inland transaction will be there. That inland sales before the goods reach the shore is known as high sea sales. When inland sales will take place before the goods are received in India, when the goods are in the ocean, that is high seas. Why it is called high seas? 1st May it is shipped, 30th May only it is reaching India, but the sales will have taken place on 20th May itself, before the goods reach India. That is called as high sea sale. You understood what high sea sale? They give the definition, you remember. Okay. Yes. What is the advantage and all? That is different. Only question they may ask is, what is high sea sale? They will give some 5 options. You remember, the goods getting sold when the goods are still in the high seas, or the goods reach the Indian port. Destination port, it has not reached. Before the goods reach the destination port, goods are sold. Okay, these are the new concepts. If questions comes, don't miss it. High sea sale, I will share with you with an example. Go through that, you will have an idea. Okay, friends. Now, NR account, I think 18 question over. Because you have got limited time, it's a quick revision. So, okay. NR account, I think all of you are familiar, but anyhow, nominee in the NRE FCNR account, only a resident relative, non-resident relative, either ARB. The answer is either ARB, D, none. So the answer is anybody can be a resident. Anybody can be a nominee. Okay, nominee means, yes, one by one will go. Oh, sorry. Nominee in a NRE, FCNR, either a resident can be a nominee or non-resident also can be a nominee. So that is, I think all of you know. Then 20th one, a non-resident nominee, the settlement can be, is a non-resident nominee, but account is NRE, FCNR. NRE, FCNR means dollar, forex. Though it is in rupee, it is as good as dollar. It can be convertible anytime. FCNR is dollar only, that is forex only. So the non-resident nominee, the settlement can be in any convertible currency. In any convertible currency, or it can be credited to, the nominee can open a NRE account, FCNR account also using the settlement money. You understood the question number 20? This resident nominee can get the demand the settlement in dollar or in rupee also. It is his choice. Suppose he wants the settlement in dollar, he can settle in dollar. Or instead of settling in dollar, he wants the settlement proceeds to be credited to his NRE account. Yes. NRE account is convertible dollar. FCNR is, yes. Okay, FCNR is as good as dollar, but it will be a term deposit. But NRE, it can be a term deposit also. It can be an operative account like SP also. So this is the question 20. 21. A resident nominee. Here, non-resident nominee, he will receive the settlement in dollar. But is a resident nominee always in rupee only. Always in rupee only. For him, no dollar because a resident nominee. Account may be non-resident, but nominee is resident. He will be settled in resident rupee account only. Resident rupee account only. Answer, question answer. Then next one, NR nominee in a RFC account. RFC means resident foreign currency account. But it's a NR nominee. Now no repatriation. The repatriation is only for the original account holder. Nominee doesn't have any repatriation because a resident account. So the question is, can you repatriate? Can you credit to NRE? Can credit to NRO only? Either A or B? No. Answer is C. Answer is C. The NR nominee in the RFC account. RFC is a resident account, it's not a non-resident account. Though it's a dollar, the dollar facility is available only for the original account holder. Nominee cannot get dollar. So he cannot repatriate. Maximum he can do is, he can credit to NRO. From NRO, I think $1 million. You can, no. Which one, Jay?
So repatriate means what is the meaning repatriate?
Repatriate means convert to dollar, sir. Payback. That is payback in a convertible currency. Repatriate mean, very good. The terminology repatriate refers to convert the Indian rupee back to another currency, back to another global currency. That is called as what? Repatriate. Okay, is remitting in dollar. That's the meaning of repatriate. Okay, friends, repatriation. Now, next question, EFC account, can it be charged as security to any loan? No. EFC account is a current account. It can be opened by exporters or beneficiaries of inward remittance. The EFC account, the balance has to be utilized within the next succeeding month without fail as per RBI guideline now. So the EFC account, exchange earner foreign currency account, it cannot be a term deposit. So there is no question of charging EFC as a security, collateral security, prime security to any of the loan. Strict no. Okay. So you note down, yes, it is a current account. No interest will be payable. It cannot be charged as a security. I think we have, so one odd question, sometimes they will ask, you immediately answer. And EFC account, next question. EFC account opened in August 2020 with $20,000, and this balance in EFC should be utilized latest by. This is a situation. Indirectly, they will ask. They will not ask directly. Yes, opened the account in August 2020. Within which day he should utilize this dollar, or yes, he can repatriate. Repatriate means again he can remit abroad. Okay. So the answer is EFC balance. Yes, sir. Yes, sir. Of an exporter should be used for any purposes abroad or converted rupee latest by last day of the succeeding month. They will give situation August any day, it will be 30th September. Before 30th September, they have to convert. They have to convert and credit to rupee account. It will be converted mean dollar will be converted to rupee and credited to the resident account, or the dollar can be used abroad for any other purpose. A dollar can be remitted abroad. So that is the purpose of EFC. That is question number 24. Now time gap is there. Earlier time gap was not there. Now it has to be utilized latest by the last day of the succeeding month. Okay. So now diamond dollar account. Every now and then they are asking. last question also. I think every year 2 exams. Huh? Yes, sir. The 25th question, diamond dollar account can be opened by whom? Diamond exporter. Diamond exporter. And what is the condition for opening diamond dollar account? Why they call it diamond dollar account? Diamond exporters are opening dollar loan itself. It's not a EFC. EFC is different. They will open the dollar account because they're eligible, provided their turnover is 5 crores during the preceding 3 years. 5 crore minimum average during the preceding year, they are eligible for dollar account. Okay, this dollar account also same rule will apply, but don't call it EFC. It's a diamond dollar account. It's a special account to motivate whom and how many dollar accounts are permitted. Diamond dollar accounts are permitted. The value, 5. Diamond dollar account permitted is 5. This is a frequently asked question. Just to have a look at it. Now some more FAQ. The interbank forex deals are settled through whom? Supposing within India. Within India, okay, I am, and the Canara Bank is getting dollar from Bank of Baroda. So the dollar will be delivered to Canara Bank, and Canara Bank has to deliver equivalent rupee to Bank of Baroda. That is known as interbank settlement for forex deal. And who is taking care? CCIL. I think you have to remember some questions. These are frequently asked. Okay, so question number 1, it is called the settlement by banks in India for forex interbank settlement through CCIL, Clearing Corporation of India. 1 mark. Interbank forex trading in which screen? That also 1 year they asked. Reuter, REUTER, Reuter trading scheme. Because some odd words, some odd concept you have to always remember. Question will be there. Next question they asked is, very often asked is, chip. That is so the expansion. Okay. What is the expansion? Clearing, interbank. So like that, interbank clearing system. CHAP. CHIP is a interbank clearing system in United States. These are, in New York. CHIP is New York. Fedware is for the entire United States. Only for New York, for bank-to-bank payment, they've got a separate system that is called a CHIP, CHIP. So they will give option, remember, it is only for New York. The Fedware, that is bank-to-bank. Now we are having RTGS. RTGS is global, but the CHIP is only for all the bankers in New York alone. New York is the capital, financial capital of America. So many banks are there. So within all the banks will have branches. So all settlement between bank to bank will be through CHIP, CHIP. And what is Fedware? Fedware is nothing but a clearing system for all the banks in US. So United States is such a big country. All the states of United States are connected through a network. So Fedware is operated by Federal Reserve Bank. So their Reserve Bank, like our RBI, for domestic payment, like our RTGS and our NEFT within India, they have got another system that is called Fedware. That is only for Americans. This is only for New York payment. This is for all domestic payment within the entire America. That is Fedware. And CHAP is a system used in UK. CHAP is a system equivalent to CHIP but used in UK, London. CHAP, CHAP. The expansion, you don't worry. If you want to know the expansion, it is there. But all will be in capital. CHAP is equivalent to CHIP in UK. That is, all bankers in interbank settlement through. This is 1 year they have asked. That is why I am given you. And target is a system used in Europe, European, Germany, France, Italy, Switzerland, Netherlands. So those interbank payments within Europe, that system is known as a target, TRGET. And LIBOR rates are earlier, now also. LIBOR rates are announced, but now instead of LIBOR, our linkage. Okay, it's okay, but still the concept is they're announcing for 5 currencies, 7 maturity, totally 35 rates. Now LIBOR equivalent all have come. Okay, but LIBOR, if they ask 5 currency, which are the 5 currencies they will ask? US dollar, pound sterling, Japanese yen, euro, and Switzerland franc, and for 7 maturity. So
Yep.
totally, which one, sir?
Switzerland franc is not there,
Which one, sir?
sir. I think Canadian dollar, Australian dollar. Switzerland franc is not there. I think 5 currencies.
5 currency? Yeah, okay. Is it?
But
Canadian
Switzerland
franc was
Australian dollar, Japanese yen.
Well, that okay, and it don't get confused with your FCNR account. The FCNR account, I remember now it is can be opened in any convertible currency. Earlier they told American dollar, sorry, Australian dollar, Canadian dollar. Now FCNR account can be opened in any convertible currency. Okay, friends. So correct. Sometimes you will get a confusion. FCNR dollar in any convertible currency. Singapore dollar also permitted. Australian dollar also permitted. But LIBOR, it was announced earlier only for 5 currencies. Okay. I think some changes have come. Supposing the question is there, keep it in mind. Okay, friends. Yes. Now, again, one more question. All corona related. LC expires on 31/12/2019 and shipment done on 5/12/2019. What is the last date for submitting export document to an AD? Now here you have to remember one UCP rule. What is the UCP rule? The LC does not tell specifically. Okay, you can note down. The LC does not tell specifically maximum number of days taken to present the document is 21 days from the bill of lading. 21 days from the bill of lading. So 21 days when it is stipulated, what is the last date for submitting? LC expires on 31, shipment done on 5/12. What is the last date? So 5 plus 21, 26 or LC expiry, whichever is not later, whichever is earlier. Whichever is earlier. Whichever is earlier now, 5/12, supposing instead of 5/12, had they done on 15/12. 15/12, 21 days when it will go beyond 31. So the rule is, remember, 21 days from the date of shipment or before expiry of the LC, expiry date of the LC, whichever is earlier. You keep it in mind. That rule will help you to get 1 mark. Agreed or not? Understood? Okay. Now 31st, under COVID environment, for some time, normal period of realization is 9 months. You remember, maximum credit you can give to foreign buyers from India is 9 months. During Corona, 6 more months they had given. I think the concession is available for some shipment up to 31/3/2022 also. Now we are in July, up to 22 also. Because of the Corona impact in almost all the country, instead of 9 months, 6 more months, 9 plus 6, 15 months. Okay. So if you remember that, sometimes it will get you 1 mark. Normal period is 9 months. Because of Corona, 6 more months, 15 months maximum to realize the dollar for goods sent from India. What's the minimum export turnover to be achieved for getting *1 status under the foreign trade policy? Simple question also they will ask. The answer is $20 million. Okay, sorry, $20 million, that is trade credit. Sorry, sometimes the memorizing the data sometimes will be yes, little yes. *1, there are 5 stars. To get minimum *1, if the exporter is able to export $3 million average, not 1 million, 3 million average, equivalent in Indian rupee. Now today 76, 75. So more than, okay, maybe 22, 23 crore average is doing during the preceding 3 years. He will get 1 star. And who will give the star? DGFT will give the star. What is the benefit of the star? He will get so many incentives. He need not have to give bank guarantee. He will be eligible for 100% EFC. He is eligible to ship the good directly. So many incentives and fast track clearance by customs. He need not have to wait in the customs. He is like almost a VIP exporter. That is star status, 1 star. Okay, minimum turnover, remember US dollar 3 million or equivalent in INR. If they achieve during the preceding 2 years, they will get, sometimes they will use the word preceding 3 year. Now here they are using the word preceding 2 year. 2 year average, if they get 3 million US dollar, 1 star straight away. Suppose the MSME meaning 50% is sufficient. 50% of the eligibility. 3 million, if they achieve even 1.5 million, because it's a small unit, straight away first star will be given. Second star and all, no concession, only for first star is a MSME unit. 50% achievement is also, yes, will enable him to get the star 1. Okay, so these things remember. Now next one, when an export side bill is discounted, how many days interest you will collect? You have to remember NTP. NTP means normal transit period. Even for side bill, normal transit period as per FEDI guideline is 25 days. Now, that 21 is different. That is UCP to deliver the document. This is 25 is NTP. So the 21, 25 don't get confused. That 21 as per UCP guideline to tender the document after the shipment. Okay. Yes. Here the normal transit period, therefore the document reach the other country, side bill also it will take time. That normal transit period is 25 days, NTP. So even if you give side bill, you have to collect interest for 25 days. If the bill is realized on 20th day, 5 days interest you have to reimburse. And if it is realized on 30th day, 5 days interest you have to collect as old interest. System will automatically validate. Automatically it will calculate. So, but keep in mind 25 days. And now the question, sometimes they will give arithmetic also. He has given a side bill, how much interest will be collected. Okay, side bill means how many interest to be collected, 25 days interest you have to collect it. So PNR by 100, 25 into principal amount into rate of interest divided by 100, and also you have to divide by 365 because the 20, when you use days, you have to use 365, PNR by 100. Agreed? To calculate the interest, because you have to calculate manually using your calculator. That question also I have given. And again, any organization or NGO wishing to receive foreign contribution for social and educational purpose have to register with Home Ministry. You remember? Home Ministry, Ministry of Home Affairs. Yes, and it will come under FCRA Act. This is not FEMA. This is FCRA. Another act will interfere. FCRA. What is FCRA? Note down. Foreign Contribution Regulation Act. That is different from FEMA. FEMA is different. FCRA is different. Okay. So any NGO they have to register. That is FC. Yes, they have to. It is.
Yes, sir, excuse me.
Yes, sir.
So this shipment you mentioned, sir, shipment submission of bill that you said 21.
21 days. 21 days if it is not specifically stated in the letter of credit. Sometimes the letter of credit will tell document to be submitted within 15 days, only 15 days only. If the LC
but in
is
the
silent,
in question number 37, it says 25 days. What is the confusion?
this is different. This is to tender the document under a letter of credit. Supposing a letter of credit is telling, supposing is an exporter to submit the letter of credit to his bank, that is 21 days from the date of shipment or within the expiry of the LC, whichever is early. Now he has submitted. Now this question is different. He has submitted, boss. Okay, as per the 34 question, he has submitted. But the bill submitted is side bill. Now today he has submitted. Now banker is in a banker goes through the bill. The bill is side bill. The bill is side bill. All bill immediately at the time of negotiating, discounting, you will collect the interest. Collect the interest up to the due date. You know, bill financing, when you finance a bill, the transit period interest will be collected immediately. Suppose the realization is after that transit period, that this 25 days is different from that 21 days. That is to tender the document. But once you tender the document, you are now discounting by passing the transaction. How many days interest you have to collect? Because you told us only side bill. Side bill mean due date is what? Due date is, if it's a 6 months bill means 6 months interest you'll collect. It's a 3 month bill mean 3 months interest you can collect. But when it's a side bill, you have a doubt. Like, you know, that day we discussed in risk management or balance sheet
Sir,
management. Yes,
site bill, site bill is mentioned date. Usance bill is, I think, future date.
Yes, yes. Side bill, they will not mention the date, boss. Side bill, they will tell export side bill. That means at site. Sometimes they will tell 30 days at site. Then 30 plus 25 days you have to load it. Supposing you have to read the bill of lading, bill of exchange. The bill of exchange reads as at site pay $10,000 mean only 25 days will count. Supposing 30 days site. 30 days site mean 30 plus 25 days. So if they are not telling 60 days from this bill of lading, then they are not telling site. They don't use the word site, then only 60 days will prevail. You have to calculate due date depending on the words used in the bill of exchange. Okay, friends, this exercise I have not given earlier, correctly you have told. It is simply told site export bill 25 days, transit period 25 days. Suppose it is 60 days site mean 60 plus 25 days. Suppose
Sir.
it is telling, yes, sir.
Sir, if it is 60 days site, it is again it will become a seasons now, sir.
No, 60 days. Again, site means what? 60 days site mean, 60 days site mean, it will, site means what? Siting at the other country. Remember always, pay at site mean, not pay it in the exporter's country. The documents have to travel from the exporter country to the importer country. So FDI rules are clear. If the word site is used anywhere in the export bill, the number of days to be taken as 25 days, because any part of the globe, it on an average, it will reach the other end, courier, and that bank has to open the counter. So maximum days when the word site is used, yes, is 25 days as per FDI guideline, not FAMA guideline, FDI, Foreign Exchange Dealers Association of India. Supposing how the bill of exchange is worded. Supposing they are simply telling site export bill mean 25 days interest you have to collect upfront. Upfront mean immediately you have to collect. Supposing realized afterward differential interest you have to collect, the system will calculate automatically. That is called as what? Value date basis. It will calculate, it will recover the difference at a penal rate. 2% penal rate also you will put. Suppose realized early, you have to pay back the this one. And the second mode is, I'm telling all possible questions. Supposing they are telling 30 days site. What does it mean? The documents have to go to Indonesia, and Indonesian people that 25 days, and 30 days site mean again 30 days you have to give for making the payment to the importer. So 30 days site mean this side 25 days, that side 30. So 55 days interest you have to collect. Suppose a 60 days site mean 60 days normal usance, and this site again 25 days for travel of document, transit period. So 60 days site means 60 plus 25, 85 days interest you have to collect. Supposing simply they are telling not site, 90 days from the bill of lading, 90 days from date. 90 days from date mean then 90 days only you have to collect interest. Due date will be calculated depending on the words used in the covering documents or in the bill of exchange. Bill of exchange is a document that is going to be used for determine the due date of the bill. Due date of the bill is very important for calculating the interest, transit period interest. Okay, you have to calculate the due date first. Up to the due date, you have to calculate the interest. And if it is delayed beyond the due date, owed interest will be collected. If it is realized before the due date, interest will be given. Agreed? Yes, boss. Doubts clear? So 35 question different, 37 question different. Here you are collecting interest. This is only for UCP angle for accepting the document. Okay. The LC
Okay,
is silent only 21 days. Okay. Now go further. Yes, CDF. All varieties I am giving. CDF. Currency declaration format need to be filled inward remittance with dash in respect of foreign currency dash. So the CDF is always filed at the immigration counters at customs. Our Indian customs will be there. You have to file the CDF in currency declaration format when the inflow in currency is more than US dollar 5,000. Exactly US dollar 5,000, no need. They will not cause any problem. But US dollar 6,000 you have brought, you have not declared in that challan. One challan you have to fill up. That challan is known as what? It's not a challan, it's a form. That form is known as CDF. Customs will put the seal. If they found out $6,000, but they have not declared, they have every right to confiscate because the law is law. Okay, so the 40th one, foreign currency up to US dollar 2,000, every one of you can keep at home under FAMA rule. And foreign coins, no limit. Coin, any limit you keep. That is 40th. Simple question. We'll go a little faster. Forex cannot be released for two countries. Which are the two countries? Nepal and Bhutan. Nepal and Bhutan. Not Sri Lanka, Pakistan, Bangladesh. You can release dollar. But for visiting Nepal, Bhutan, you can release only rupee and don't release rupee. Okay, they are not supposed to. You are not going to release rupee. They cannot carry more than 25,000. If they want to carry more than 25,000, big denominations are prohibited. They can carry in only small denomination. Up to 500 and big denomination, only 25,000 is permitted to carry to Nepal, Bhutan. If they want more, they have to carry in small denomination. Similar rule will apply for bringing for a rupee into India. Maximum rupee they can carry abroad is again INR 25,000. Okay. So these things I think you are aware, but still, okay. Another risk is this one here they have asked, what is Herstatt risk? Herstatt risk is the risk on account of time zone difference, settlement delay on account of time zone differences. What is time zone? When Japan wakes up, when Japan sleeps, when Japan banks are working, we are sleeping or we are just starting. Or American banks are sleeping, we are working. When we are working, they are sleeping. So this time zone difference across the globe sometimes will result in a delay in settlement. That risk is known as Herstatt risk. So sometimes they are asking, remember this. Trade credit that can be permitted under the powers of the AD, just now we discussed 50 million. Trade credit means supplier credit as well as buyer credit. 1 year for non-capital good, 3 years for capital goods. Maximum dollar you can permit is US dollar 50 under the powers of the AD per transaction, not per annum. Per transaction. Beyond that, you have to go to RBI. So these are the things, improvement. And rate of interest, LIBOR plus 2.5. LIBOR for that currency plus 250.2.5. Okay. And this question, what is the maximum interest? LIBOR plus 250. Importer getting goods from the seller abroad on credit time is called supplier credit. Okay. AD arranging a short-term loan from foreign currency. I explained through a chart now that is called as buyer credit. Because normally people will be confused between supplier credit and buyer credit. They will try to explain. So here, a seller credit, this is also known as seller credit or supplier credit. This is buyer credit, only one terminology. You understand the concept. Maximum time limit for settling import of non-capital good, import of non-capital good 1 year, and for capital good 3 years. This is 1 year for non-capital good. Non-capital good means raw material, services, consumables, spares. And here it is known as what? For capital goods, it is 3 years. Supposing knocked backed by bank guarantee, they can go up to 5 years. But bank will give guarantee only up to 3 years. But the importer, exporter, if they have a mutual understanding, RBI rule permit 5 years. They can have, but bank cannot give a commitment beyond 5 years. That you remember. Okay. That 60th, 50th one. This also they are asking. All questions are frequently being asked. Okay. Write-off of export bills can be under the normal power up to 10% of AD. AD powers are write-off. Write-off means, because this is an important thing, they will ask. Write-off. Write-off of an exporter bill cumulatively during a financial year can be up to 10% of last year, 10% of preceding financial year turnover. The 50th question. The 51 question, advance remittance for aircraft can be up to how much? 50 million US dollar. Aircraft, if you want to import, and the seller abroad wants advance payment per transaction, AD, authorized dealer can remit $50 million. Otherwise, $2 lakh only. Only for aircraft advance remittance can be 50 million. For all other goods other than aircraft, $2 lakh. I think that question also will come. Yes. Okay. All other advance remittances, only $2 lakh, $2 lakh for goods. For services, $5 lakh is the maximum advance remittance you can send from India without a international bank guarantee. Beyond that, you can send, but you should insist for a up to $2 lakh advance remittance. You need not have to insist for a guarantee from the seller's bank, international bank guarantee. Suppose it doesn't supply the good, it becomes a loss for India. That is why they are putting all these regulations. Okay, but for aircraft, limit is high, $50 million as a AD you can remit. And proof of import for non-physical imports. Supposing some goods have come. For other goods, bill of entry. Remember, for other goods, the proof that goods have been imported in India is bill of entry. Remember the word bill of entry. Suppose the goods are going out of India, what is the proof they will ask? Shipping bill. The bill of entry, shipping bill, both will be, yes, will be at the counters of the, now no counters, online at the website of customs. Now customs will generate shipping bill for exports. Customs will generate bill of entry for imports. Without that, goods cannot leave the country. Goods cannot come into the country. Okay, these things sometimes they will ask, you remember. Suppose you are importing, you will not file, and importing what? Non-physical modes like software you are importing. You are importing some technology that will not be that will not come to customs. Customs will not see. It will be auditor certificate. When you are exporting software, softex. Okay, when you are exporting, it will be reflected in software. When you are importing, what is the proof? Auditor certificate. Auditor will, the company auditor or one auditor, qualified auditor will certify, yes, these imports have taken place. Okay, merchant trade transactions are those. This is the definition part we already discussed. Okay, the cycle of the merchant trade, 9 months. Okay, and forex outlay fee, 4 months. And a local unit supplying to SES unit is called a local unit. Supplying goods to a local SES unit is called deemed exports. Deemed exports. Sometimes the question will be asked, some situation they will give, what this kind of exports? Then immediately you tell deemed exports. Whether deemed exports are eligible for incentive? Yes. Deemed export also eligible for incentives as good as regular exporter. You see the example, a local unit supplying to goods in SES. SES is a special unit. No tax, nothing. They are going to only export. And because of the supply, they are exporting. So this is called was deemed export. Though he is not directly exporting and he is supplying to SES, SES is exporting. That is why it is called a deemed export. Capital goods without duty can be imported under which scheme they will ask. You note down the scheme, EPCG. Export Promotion Capital Goods Scheme. Because small things they are asking. And what is the EPCG, Export Promotion Capital Goods Scheme? This is one of the schemes. Many of the customers are benefited. They can import without paying any duty. But they have to achieve the EO obligation. EO obligation means how much duty they are saving, 6 times the duty saved. That question I have not given, but you note down how much they should export, the obligation they should give an undertaking. I will export minimum 6 times the duty saved. The 6 times, remember, don't miss the question. And EPCG also they are asking. Because anything can be asked, The incentive scheme for export of goods is the incentive schemes for export of goods scheme. Now ROTUP is a new scheme. Like I think bread, some SME bill discounting also one new scheme has come. I think TREP. So similar way, this new scheme you have to remember because sometimes they will ask on a new scheme. What's the new scheme? ROTUP, ROD, the remission of duty and taxes on export product. That's the meaning. Merchandise export. This is known as all, not service export, all physical goods. Okay, it's an incentive scheme recently, and the incentive scheme for export of services is called SEIS. SEIS. Service Export India Scheme. Service Export India Scheme. This remission of duty and taxes on export product is a new scheme. Earlier it was MEIS. Now it's a new scheme. That is why just to keep in mind, 1 mark, don't lose. Okay. This will give incentive to the exporters. How it will give and all, they will not ask. At least what is the name of the scheme, they will ask. Okay. And now resident PA holder, some question. A resident PA holder in NRE account can deposit foreign currency, some prohibited, is a prohibited, is a resident PA holder and is remitting dollar, foreign currency, physical currency. Up to how much limit? 0. He cannot remit. So some item you have to remember, a resident PA holder in NRE account, whether he can deposit foreign currency in NRE account, no, it's a 0 because it's prohibited. He cannot deposit. Only the original depositor can deposit dollar in his account because otherwise it will Hawala transaction. So the some okay. Again you remember, you see another question. A resident PA holder in the NRE account, he remits is a NRE account of Mr. Arun. One day he seeks a remittance, $10,000 he wants because I am a power of attorney holder. I can operate the account and he is wanting to remit $10,000 favoring Mr. Smith. Favoring Mr. Smith, London. Whether it is permitted? No, it is prohibited. Third party remittances from by a PA holder not permitted. He can maximum remit to original account holder. Some prohibited you have to keep in mind. A similar way, you cannot release Forex to Nepal, Bhutan. Even Sri Lanka, Afghanistan, any country you can release. So some prohibited if you keep in mind. Payment and reserve, these are the frequently they will test your yes. And here, yes, you see, outstanding export bill remain bill for $3,000 remaining unpaid for 9 months shall be reported to RBI in which return. The return is known as XOX. Now it is not prepared in the branch. It is all integrated with the software, RBI software. Okay, so you remember XOX. XOX is the export outstanding. Okay, export outstanding. Yes, it is. Now it is incorporated. So any export bill, unrealized bill beyond $25,000, beyond 6 months will be appearing in this statement. Okay, and importer return in import bill. Yes, yes. For $1,20,000 and proof of imports bill of entry not produced within 6 months from the date of, it will be reported in BFM return. Another return is there. There is no, they will ask questions because it is all now integrated, but the return is known as the statutory return, that is why they will ask. This one statutory return, that is compulsory you have to submit. Now all branches will not submit because already in the system software. Okay, I think all of you know, any cash withdrawal beyond 10,000, 10 lakhs, you have to report the intelligence unit. Similar way, these are the things you have to remember. Compliance, regulatory guideline. The bill of entry, okay, bill of entry, BIF, bill of entry follow-up. Okay, it has to be report. The bill of entry has to be submitted within 6 months from the date of imports. Otherwise, it's a violation. Okay, OBU. What is OBU? For example, Noida, Santa Cruz. One bank is there. Santa Cruz is a SES, Special Economic Zone. What does it mean? All the units will only export. And one bank branch is established there. State Bank of India branch is there. That branch is of State Bank of India. Though it is in India, it will be called as OBU. Offshore Banking Unit. OBU. Offshore Banking Unit. And it is, the offshore bank unit is outside India? No. Inside SES? Yes. Answer is B. Inside SES. Is not a OBU will not be outside India normally, but here it is located in SES mean it is within India, but it will qualify as if it's a foreign branch. You have to treat it as a foreign branch, and their salary will be in rupee only, but they will be treated The customers only will have dollar account, everything will be treated as, that is called, concept is known as OBU. I think only few OBs are there, but question wise, they may ask. State Bank of India has got, Canara Bank has got one branch, because it is very difficult to have a only dollar transaction will be there in the branch, but some local transaction will be there, rupee transaction will be there. That is OBU. And a non-corporate can directly import up to, non-corporate means companies no limit. You can directly import without the documents being routed through banks. That is called direct imports. Up to $3 lakh, not 3 million, 3 lakh. So this is a thing you have to remember what to do. 3 lakh, $5,000 for CDF. Okay, so like that. Corporate customer can have direct import up to value, no ceiling. Corporate customer means no ceiling. Corporate customer, you see, 3 lakh US dollar only for partnership and individual. As an individual, they will give situation. You are an individual or a doctor, they will give situation. A doctor wants to import directly for a life-saving medicine or a small diagnostic equipment. How much he can import? He can import directly 3 lakh US dollar worth goods at every time. Okay, that is the from our liberalized rules. Okay, corporate customer, no ceiling. For direct import, no ceiling for corporate customer. 67. EPCG export obligation is 6 times the duty saved. Is zero duty, no. Otherwise, some duty has to pay. What is the benefit? Duty benefit 6 times he has to export within 6 years. Then he will be freed. Otherwise, they will catch him. Okay, he has to pay back the duty. Export factoring transaction mean, what is the export factoring? Forfeiting, they will ask. Factoring mean short-term receivables. Export short-term receivables, maybe 6 months, maybe 9 months, receivables, till he pays, exporter need not have to worry. The exporter will get immediate payment for the bill payable after, yes, prescribed credit period. That is called as USAN's export bills will be discounted immediately by a specialized person. That is known as factoring. It's a specialized activity. It is as good as bill discounting only. But factoring is beyond bill discounting. Bill discounting only we are giving finance. But factoring means entire thing you will take care. Entire thing, follow up, everything. The bank which is financing will take care. Okay. Yes. And again, with recourse factoring, without recourse factoring, they will ask. I think this is a familiar question. I think you are habituated. Without recourse mean if the bill is not paid ultimately, the exporter account will not be debited. The money, finance will not be recovered from the exporter. That is without recourse. With recourse mean, with recourse, the bill is export bill discounted by a bank is finally not paid because of various reasons. The discounting bank, negotiating bank can recover the money from the exporter. That is called as what? Recourse factoring, non-recourse factoring. Remember? So this question. Forfeiting is nothing but forfeiting. Forfeiting is nothing but discounting a deferred export receivable. There are two kinds of receivable: short-term receivable, deferred receivable. Short-term receivable means within 6 months, 9 months, you will get the dollar. Is shipping on short-term receivable. What is long-term receivable? Suppose you have done a project in Ethiopia. The Ethiopian government will make the payment in 5 years, 5 installment. Till 5 years, our exporter need not have to wait because the loss for him. Immediately, he will tender the bill of exchange co-accepted by the buyer's bank. So that bank, the bank in India, especially Exim Bank, they are acting as, yes, okay, they are immediately doing what? Forfeiting transaction. Forfeiting means immediately giving the money in dollar, immediately discounting the bill after collecting the interest up to the due date. That is called as what? Forfeiting. This will be done on without recoursing basis only. Normally, it is done for long-term export bill, not short-term export bill. Short-term export bill means they will call it factory. But long-term export bill, you cannot call it factory. It is called as forfeiting. What is forfeiting? He is renouncing his rights. He is renouncing his rights. Okay, who is renouncing his rights? The person who is exporting is renouncing the rights to his banker because he has got the full money from the banker. You have given me the full money. Now to collect the money under this bill is yours. Like that they will. That is forfeiting. And the role of banks in India, forfeiting transaction, facilitator. It is a facilitator. Facilitator. The bank is not a creditor, syndicator, speculator. The banks in India will act as a facilitator. The forfeiting is done by Exim Bank. Normally Exim Bank or foreign banks. Banks in India, they will act as a facilitator, mean like an intermediary. They will connect the exporter to Exim Bank or to another forfeiting agencies abroad. So it is a long-term receivable, long-term export bills are converted to cash. Anyway, you understand. Don't miss the question. Okay. These questions are also asked. What is the role of the banks in India in a forfeiting transaction? And forfeiting transaction, they will use the word avalization. Avalization, nothing but co-acceptance. Avalization is the foreign word. We are calling it co-acceptance. Always co-acceptance, who will do? The buyer's bank only will do co-acceptance. Seller's bank will do negotiation. The buyer will accept. The buyer's bank will co-accept. He will also put his signature. So the commitment is almost parallel to each other. Both are jointly and severally liable. The buyer as well as the buyer's bank, that is known as what? Co-accepting. Co-accepting. The co-accepting is also called as foreign terminology avalization. Avalization. So when the word avalization is popularly used in international transaction, what does it mean? A buyer's bank accepts to pay a bill. A buyer's bank accepts to pay a bill. That is avalization. Okay, avalization. All these are yes given to you just to specific approval list. Very often they are asking. It is also called as SCAL. Specific approval list is maintained by, because ECGC, two questions will be there. Specific approval list is maintained by whom? Not RBI, not DGFT. It is maintained by ECGC. It is maintained by whom? ECGC. It is called as SAL, SCAL, specific approval list. Is a good list or bad list? Is a bad list. This list is contain whom? The list of exporter who are defaulters. ECGC issues dash to exporter, dash to banks. ECGC issues guarantees to, ECGC issues policies to exporter, guarantees to banks. Banks will get a guarantee from ECGC, and exporter will get a policy from, like your insurance policy, payment policy, payment protection policy from ECGC. Exporter will be benefited. What does it mean? The foreign buyer does not pay, he will get the settlement. The risk not covered by ECGC, they will give a list. Trade disputes are not covered. The trade disputes are not covered. The exchange rate fluctuations not covered. Okay, or any contractual omissions by the exporter not covered. Supposing he has to ship by 10th April, they will give a question very carefully. You have to understand. Supposing the exporter has to ship before 10/5, he has shipped on 12/5. The buyer rejected the goods, rejected the payment. Now, whether he can claim from ECGC, they will ask. You tell the question. This cannot be claimed from ECGC because it becomes a contractual default by the exporter alone on the part of the exporter. So ECGC will not make such settlements. They will only settle commercial risk and political risk. Note down. Next question. The comprehensive risk of the ECGC covers commercial risk and political risk. What is commercial risk? If he is non-paid, if he is unpaid because he has become insolvent, or he has left the country, or he has wound up the unit, or he is in continuous loss, that is known as commercial risk. What is political risk? If something happens in the country like Ukraine or in Russia, payment is stuck up, that risk is covered under the ECGC policies. Trade disputes. Okay. Understood, friends? Okay, 78. And this is very important. When the exporter's account become a NPA on 39, and what's the time limit for sending notice to default to ECGC? Time limit is, oh, our great friends, enthusiastic learners. Okay, yes, nowadays they are also interested. Very good. Online classes. Okay, yes. The NPA, it has been classified on 39. Within 30-10, within 1 month, oh, October has got, yes, 31st October, that is next day, within 30 days they are telling. So don't even go to 31st. Within next 30 days, the account become NPA. Within 30 days, you have to send a notice of default to ECGC. Within another 6 months, you have to prefer the claim. So 1 plus 6. Within 1 month, account has become NPA, mean within 1 month you have to send the, or 4 months from the due date of the, yes, suppose it's a bill or due date of the packing date. 4 months, our 90 days concept, 90 days is 3 months. So 4 days from the due date or 1 month from the account becoming classified as NPA, you have to send a notice to ECGC, and within another 6 months from this date of notice to ECGC, you have to prefer the claim. The time factor also they will ask. Okay, so all these are I'm sharing with you. Now it's another case study I have given. Look at the case study. Okay, I have explained step by step. This question also, how much will be settled, what is the loss, what is the refund. 5 more question, friends, believe it or not. And what is the buyer's policy, buyer's limit. The ECGC is tying up with whom, Dun and Bradstreet. So this I have explained. I think no need to explain because it just you read. It is all illustrative examples are there. Okay, you can quickly understand because ECGC minimum 2 questions will be there. Small exporter policy. Okay, and so many small exporter policy I think it is coming there, but anyhow, it is coming there. Don't worry. Another Salvi, now it is tried exactly. It is in and around 12. Can I take another 10 minutes? Okay or not? Yes, boss. Yes, friends. How do you feel?
I'm okay, but
Okay, sir.
let
Okay,
us.
sir.
I am only giving only exam focus. Question, answer, question, answer. I have not come to the rates. Rates I will share with you because the step by step I already explained. So you can easily understood what you already discussed in the classroom. Here the focus is, Sir has given opportunity to revisit some of the frequently asked questions. We cannot exactly predict. I predicted some of the question. For example, forex currencies that can be released for personal visits other than Iraq, Fiji, CS countries, US dollar 3,000 only. Okay, currency format maximum to normally 3,000 you keep in mind. But some countries like CAS, USSR, you can release up to LRS limit. What is LRS? Liberalized Remittance Scheme. Up to $250,000 also. $250,000 also you can release in currency format because these countries have little problems in encashing other way of mode. Okay, for other countries, $3,000 is okay. Other eligibility, let them carry in the form of traveler card or travel swipe card, smart card, any format. Okay, and Iraq, Libya and Fiji, $5,000. $5,000 maximum instead of $3,000, $5,000. Whether USSR, Russia and other countries, CS countries, up to LRS limit. Okay, the foreign currency up to $5,000. Foreign currency for visiting the USSR, CS countries up to LRS limit. What is LRS limit? $250,000 per annum, not per occasion, per financial year. The financial year starts from April to March. Okay, maximum Indian rupee that can be carried abroad 25,000 only. Indian rupee abroad is no use to pay when they are coming back to India to make payment at the airport and other thing. So they are allowing up to $25,000 rupees only. Okay, not more than that because they feel that it can be exchanged abroad. So that is why they are restricting under FEMA guideline. Carrying rupee abroad maximum is Indian rupee per passenger or per person is 25,000 rupees only you can carry. And high sea sale, the sale should take place. Sometimes they will ask a blunt question. In high sea sale, they will give option IC sale, the sales should take place before the goods reach Indian port. Before the goods, IC sale means another local sales. That local sales should take place when the goods are still in the ICs. That they will give in the option. I try to explain through a diagram. Okay. So now 95, 94 over. Okay. 94. Another few questions. Oh, this question also you are not discussed. Okay. Oh, up to 90 only you have come. Correct. Now our sir aim is you should not miss any of the questions. Okay. ABC company gets a LC from their overseas buyer. ABC company wants an inland LC to get the goods to be shipped abroad. This type of LC is called what? Some situation they will give. This is called as back-to-back LC. Back-to-back LC, transferable LC, revolving LC. Revolving LC means what? Between the same buyer and same seller, repeated transactions are there. So repeated shipments are there. Same, but different conditions. Then you have to open, instead of opening several LC, one LC can open with all revolving provisions. That is called revolving LC. These are the one or two questions they will ask. And again, yes, under DPU Incoterm, DPU, the Incoterm, one question will be there. I think 11 Incoterms are there. X works, okay, FAS, FOB. Okay, I think the 11 Incoterm I will, and mostly, I think this we have given you at the study material. Go through the study material once again. DPU mean as a duty, delivered, paid, yes, unloaded. Delivered at a point, unloaded. That means deliver the goods in the particular point at the buyer's country. D here, D mean not in the seller's country. Supposing goods are going to Australia, in Sydney, one place, they will name the place. That place, the exporter has to see that the goods are delivered X outside Sydney port in almost DPU. DPU mean unloaded. Unloaded mean what? Not loaded, unloaded. Unloaded mean you have to remove the goods from the, and you have to load it in another vessel. That is called loading, unloading. Loading mean you are shipping, you are loading in a truck. Unloading mean you have to take off the goods from that also you have to pay, up to that point of time, you have to bear the expenses. Okay, sharing of expenses, I think that is called as Incoterm, International Commercial Time 2020. There are also one or two questions will be there. DDP, they will ask a DDP this time. Delivered, duty paid. That means exported to deliver the goods at the factory of the buyer in the buyer's country. After getting customs clearance, duty paid, everything, it will reach the doorstep of is the extreme of XW. XW mean the buyer will collect the cargo at the exporter's factory in India. But DDP mean the exporter has to deliver the goods in the buyer's country in his buyer's godown. Up to that is pricing. Pricing mean, this is my price. If this is $10,000, this may be $13,000 also. Depends on the various factor. This is less expenses for the exporter, and this is he has to go up to he has to incur all the expenses and he will load it in his invoice. That is known as DDP, DPU, XWOR, FOB, CIF, CIP. 11 Incoterms are there. What they stand for, have a look. Simple question only they will ask. Don't miss it. 95, minimum maturity, maximum maturity. ECB also one or two questions they will ask. ECB means external commercial borrowing. Minimum maturity for ECB availed from overseas shareholder for working capital purpose is 5 years. At least 5 years it will be. Now even for working capital, that is a new thing. Even for working capital, but long-term working capital. Working capital, not short-term working capital. Normally working capital means 1 year tenure. This long-term working capital also now you are permitted to raise from ECB. To buy your current assets, you can raise a term loan. ECB is nothing but a term loan. External commercial borrowing. It will be denominated in dollar also. If the rate of interest, if it is denominated in dollar, maximum interest is LIBOR plus 4.5. But if it is denominated rupee, it is as applicable to rupee borrowing. Okay, so there is no hard and fast as applicable to rupee rates in India. That will be definitely costly. It is not linked to LIBOR. LIBOR means when you raise a dollar loan. Okay, and the maximum is, yes, 10 years. Maximum tenure is, yes, minimum, sorry, that is called as minimum average maturity, MAB. Minimum average maturity is 10 years. Up to 10 years, you can take a dollar denominated loan from abroad. Now, all inclusive cost is, all inclusive mean everything is LIBOR 6 months rate plus 450.4.5. These small things you remember, 1 mark, don't miss it. Okay. Yes, working capital now can be permitted subject to working capital also now permitted. Now ECB is permitted for not real estate, no. Equity investment, no. Capital market investment, no. Working capital purpose permitted. Some are prohibited. So permitted purposes for ECB also, one time they have asked. Okay, and the startup unit in India now can get UCB up to ECB. ECB mean long-term dollar loan up to 3 million. 3 million. Startup unit, small unit, they are struggling, or venture capital, they are unable to bring in the capital from domestic sources. So they want a foreign capital. That loan, they want to borrow from abroad to start a new venture, new activity. So the startup units can now go for ECB because cheaper, rate of interest is cheaper, but hedging it becomes an additional risk. Hedging mean you have the interest rate hedging will be there, and exchange rate will be causing loss. Subject to hedging, now it is a cost-effective loan. Is a beneficial loan, no doubt about it. So the startup unit also can go for ECB. Big companies can go up to 750 million US dollar. Automatic route is there. The small units can go up to 3 million US dollar. Okay, friends. So this is a change. Or in rupee or FC, equivalent in rupee also, or combination of both. 50% in dollar, 50% rupee. Then a rupee mean rate of interest will be costly. FC mean rate of interest will be cheap because linked to LIBOR. The 100th, yes, 100. Will the automatic road ceiling is 750 million. Okay, but I have given you shared. I can share with you another also. This I will share with you. Just to have a look at it. Export import, I think almost 120 question, which I feel this is a calculation, friends. Believe it or not, calculation. How much packing rate you can grant. Okay, what are the steps involved in calculating eligible packing rate and eligible post shipment finance? How to do? How much interest you will collect? How much handling charges? Or what rate you will apply? Because a big chapter, just to revise, I included, okay, 113, 14. Easily you can make out cross currency. One cross currency also I have. This I will share with you right now. This is apart from what you have discussed. It may be something new or something already discussed. It is a quick revision. For quick revision, this is for other than rates. 16. So many questions because we want to make you comfortable with all possible questions that may be asked in either BFM or ABM. Okay, your area of knowledge will be wide. Okay, don't rest it. Always aim for 100%. Okay, time is still there. Time is still there mean only few days at your day. Okay, maybe few weeks. Okay, next week I think ABM. Afterwards BFM. This is a BFM paper. So any questions, please? This I will share with you. One more also I will share with you, the rates. Rates today I have not told because that will take little more time to, because the step-by-step explanation I have added. How to calculate forward rate, how to calculate cross currency rate, how to calculate spot rate. If it is a TT buying, how to calculate. If it is bill selling, how to calculate. And the margin they will give, how to add. Selling rate means you have to add the margin. Buying rate means you deduct bank margin. Margin means bank profit you have to deduct in buying rates. And bank profit you have to add in selling rate. This you are comfortable. We already discussed, but still I have given you, I am going to give you some question. I will send to Sir. Sir will give you. Okay, friends. So I think, yes, we should give you